Okay.
Hello, traders. It is Wednesday, October 9th. For any of you who might be in harm's way with Hurricane Wilbur, please be safe. Hope everything's going well for you. I also want to start off this live event by saying that in the description area of the live event, I've got some links, some charitable organizations that I know are going to get the relief to the people that need it. So if you can, please donate. I know they need your help. Harry, how are you doing?
Well, I'm in LA, so no threat of hurricane here. I am well. Just watching the incredible resilience of this market right now, and uh, looking forward to this stream. Let's see if we can help some people today.
Well, let me take a look at my picks. You went solo last week, so I'll let you cover your pick in just a second. APP was a pick that I highlighted, and that was a week ago Sunday. I've also highlighted it previously back in here on this breakout. This has been just an incredible stock. I still like it to go higher. This is where I highlighted it, and you can see that that stock's been up, gosh, probably about $15. So this was in a Sunday video. And then last Sunday, I did a video on EDOG, which, by the way, in that video, I told you that I believed the market would make a new all-time high this week, which it's doing right now. DDOG, so this is where we had the breakout above the 200-day moving average. This is a cup and handle breakout here. It's above all the major moving averages. I was looking for a slight test of that 200-day moving average Monday morning, and we'll put up the 15-minute chart, and you can see that that was the test. Let's go into a 5-minute, might be a little bit more granular, and you'll be able to see that this was the open Monday morning. I know for a fact that that November 105 100 bullish put spread was there for a buck. Okay, so we had other members doing actually, I think it was gosh, now I can't even remember. Maybe it was the 116, 111, but in any event, the highlighted bullish put spread is in great shape, and the stock is continuing to move higher. So it had that little test there, and now it's off to the races. That was a really nice one. So I hope some of you got in that. Harry, what was your trade from last week?
I think I had two of them. So it was CRM long, and you see that beautiful bounce off of the SMA 200 there. When I called it on last Wednesday, I believe it was at around 277, somewhere around there. It's gone up $10 since there. So anytime you took profit, I recommended, I think, a CDS on it, which paid off well. So that trade, just, it was a textbook bounce. The gap had been filled from May 30th, and then you get this bounce off the SMA. It's not that overextended, so it was a really nice, did everything you would expect it to do on a technical basis. And then I took a short of MDB was on the short side. That one there, if you closed it the next day or even the following day, you would have been fine. Obviously, today it bounced way up. So hopefully, if you went short MDB, that would have worked well as long as you had closed it. And if you were paying attention to the market, you would have closed that trade, certainly watching as the market was moving. So either way, both of those would have worked out and been profitable for anyone who took them and monitored them. So we once again have some good trades there for everyone. And I'm sure this week we'll have a couple of more.
Yep. And I think that the recurring theme has been buy dips. At least that's what I've been preaching for quite a while now. And especially after the FOMC breakout, we had a compression. We needed to see some follow through to it. We were testing that breakout and testing it and kind of chopping back and forth. And so now we actually have the breakout to a new all-time high. But if you had just been buying dips, and I know that we had lots of choppy price action. So let's zero out and find out where that, there's your FOMC breakout the Thursday after. And so if you had been buying dips, buying dips, and buying dips, you had some bearish trend days in here where you did nothing. Okay. And then eventually you're going to get your opportunity to buy dips again. So in all cases, you're entering well, knowing that you've got that breakout that you're leaning on, that strong tailwind, and now all of a sudden, whoosh, here we go to a new high. So that was the mindset that you needed to be in.
Got a lot of questions already lined up here. I'll
Awesome.
start.
We're gonna deviate from the norm here, and we're gonna just answer questions. You did that last week, and I think people really enjoyed it. So let's answer some questions.
Yeah, there were good questions last week. I was happy to answer them, and uh, hoping that we get some good ones this week here. So let's see. What do we have? We have for a stock that drops from Ramakor Yanzian. I'm terrible with pronunciation, so forgive me. Uh, for a stock, the drops are in low volume and the pops are in high volume. Do you give added weightage, just say weight, to the higher volume, even if the stock is declining in the period? Um, well, for me, I look at, I mean, if you're looking at it, certainly intraday, right? And I'm looking at the 5 minute candles. Certainly, I'm looking, and if I see that the green bars have, well above average volume and the red bars are in low volume, then yes, I'm going to pay attention to that. Otherwise, on a daily chart, you can use on balance volume, OBV, and take a look at that. It's not a bad indicator of what direction the buyers and sellers are going in. So the short answer to your question is yes. Obviously, it matters. It if but VWAP takes volume into account. So you can on an intraday, you're looking at the VWAP and you're saying, okay, well, it is currently below VWAP, but VWAP is higher because the candles, the buy candles, were on the higher price were much higher volume. So yes, you take it into account, but that's why you have things like VWAP to pay attention to. And you don't want to look at any one particular 5 minute candle, and you certainly don't want to look at any one daily candle that could be the result of a news event. So you get this really high volume candle, the stock shoots up, and then you get average volume candles as it's going down, and that volume was due to a news event. You want to look at the VWAP. VWAP does take that into account. AVWAP takes that into account as well. Obviously, any volume weighted average is going to take it into account. So, that is why the essence of your question is why we use VWAP, because volume does matter in terms of where the buying is happening.
Got a question. Do we realize how low the volume is today for SPY? It started out very low, and you can see that from the 10 vol indicator here. Blue line is below the 0 line, but you can see how during this breakout to a new all-time high, the volume is actually starting to pick up in here. So this is actually a pretty decent rally. Also, look at the price action. Very little retracement. We just kind of nudged up to the prior high. And then when we broke out, you had to be a little bit careful in here. This is what we wanted to see, but you needed to see follow through. And when we didn't retrace into this candle at all, you could feel pretty confident that the market was going to continue higher, especially since we had just gone through a bearish 1OP cycle. So this is a divergence. When you had this breakout in here, this is the point where you would take starter longs and add on strength, which is what we've currently seen.
Keep in mind, right, Pete, that the CPI is tomorrow. Now, while the CPI has kind of lost a little bit of its luster in terms of it being a big event that the market waits for and everything revolves around, but it's still important, right? So, if CPI misses, right, let's say it comes in and they get a inflation number that's higher than they wanted. That will put a damper on things in terms of the rate cuts. So the CPI still matters, and usually you do get low volume days before leading up to the CPI. It's not, like I said, now with the jobs number becoming increasingly important, the CPI isn't as big of a deal. But to have this type of run up going into the CPI, that also shows a lot of confidence in that number, and it could allow for a significant potential downside surprise, considering they clearly are pricing in a cold CPI number.
We do have FOMC minutes coming out in about 2 hours. These are the minutes. So I don't think it's going to produce I'm going to just take these explosion alerts down here. They're a distraction. Some of them are bound to be good, but uh, the FOMC minutes, I don't think that they're going to produce much of a reaction because we've had so much Fed speak in the course of the last week. It seems like there are two officials every day speaking. So there's no guessing where they currently stand. We know exactly where they stand.
Next question here. Will you need extra relative strength, super relative strength, double secret relative strength, on a stock from the same person who asked before if the market is approaching resistance or all-time highs? Will you need more for a stock that is top of the S&P 500 than a lower market cap one? Thanks. So I assume you mean when you say that, will you need more for NVIDIA than you would for, let's just say PLTR, right? Well, I mean, relative strength is relative strength, right? You don't anticipate, well, markets, because what you're basically saying is, do I need extra relative strength for the stock when the market's approaching an all-time high? Meaning, hey, I think that the market's going to start dipping, and therefore I want my trade to be even more protected because I'm afraid of a dip here. Try to keep anticipation as much out of your calculus as possible. So treat it relative strength as relative strength. Now, obviously, if the market is giving you clear signs that it's looking like a reversal from the price action, then it's not a matter of needing more relative strength. It's a matter of moderating your longs, and it's a matter of your moderating your position size. Less about anticipating a dip. As for the larger cap versus smaller cap, the only difference there is larger cap stocks like NVIDIA tend to follow technicals more simply because it's, relative strength, as we say every week, and relative weakness measures institutional involvement, period. That's what it does. Institutions are really the only way a stock can have relative strength and relative weakness. Put meme stocks aside, because they're the only ones that could give enough liquidity and volume into an equity that is going to make it stronger than the market or weaker than the market. Given that is where a stock like NVIDIA is more likely to have larger institutional involvement than a stock like Lunar or something like that. Yes, obviously, if you have a stock like NVIDIA, it's going to be a little bit more trustworthy in terms of following the technicals, but it's also going to be a little bit more mercurial in terms of the fact that there's constantly a news drop on that stock, whereas some of the other smaller stocks aren't going to have and be as sensitive to that. So just keep in mind that what you're really measuring, and if you keep this in mind, everything else becomes much more clear. You're really measuring institutional involvement. That's what you want to find out. And you want to find that out because you want to follow the institutional involvement. And institutions are buying, 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 even as the market's going down. That is a stock you want to be in. Why? Institutions, quite simply, do not lose money. If you follow them 99% of the time, if you do what institutions do, you won't lose money. However, you don't get to do what the institutions do exactly when they do it. They have an obvious advantage. Why? Because they're the institutions. They have hundreds of billions of dollars, and they dedicate a huge portion of that to getting that advantage. The best you can do is grab the breadcrumbs they're dropping, jump on their tail, and ride it as long as you can. So, that is why, the exits and the entries, you got to be careful, but you're measuring institutional involvement with relative strength.
You had mentioned NVIDIA. I don't think it's going to be my pick today, but I do like it. And you can see here how you have this nice big dip right here. Look at the next dip. It's smaller. It didn't last as long. Look at the next dip. It's even smaller. It didn't last as long. Always bouncing off of the 100-day moving average and AVWAP-E. Now it has gotten through these high minus trend lines. I like NVIDIA. You can see that it's putting in a red candle today when the market is making a new high. It's okay because, as Harry just mentioned, the institutions are kind of in and out of stocks like this. I like this breakout. So, how do I handle this? I want to buy dips. I want to buy that dip. I want to buy that dip. I want to buy that dip. Okay. I don't want to chase these breakouts. I want to buy dips. That's been the theme. So, I can take a look at what the M15 trade signal is right now. It's still on a buy signal. And what I can do is look at maybe M30, longer time frame, make sure I get a nice deep dip in here. I'm going to use M15 and just going to right click, create alert, go in, trade signal, and when it is on an M15 buy signal, let me know. Wait a minute, it's already on a buy signal. That's right. It's going to have to go on an exit, which means there's going to be a pullback, and then it's going to have to go on a buy signal. When I have that buy signal, that's going to be the type of dip that I'm looking for. Just like DDOG that I showed you, I believe ARM was one that I showed you about 3 weeks ago, where the stock had tested a major moving average, and now is getting that alert, and I was able to buy that dip, and lo and behold, whoosh, the stock took right off because it bounced off of that support level again. Buy dips.
Let's see. Okay. So can we talk about my AMD puts? Well, they're doing fine. Look at them. Why buy so early if I expected the sell off to be on Thursday? I expected it to actually start selling off into the event, and it looks like exactly what it's doing. AMD is one of the weaker stocks today, and any market pullback, the stock is going to fall below 170. So, as I pointed out, it wasn't 100% a technical trade, even though AMD was one of the more relatively weak chip stocks. This was based on information from JPM, and I shared that information with anyone. So, whenever I do get that institutional information, which again isn't 100% accurate, sometimes it falls. It certainly did with JD. I share it and I caveat it, not a technical trade. Take it for what it's worth. Take it with that grain of salt. But if I'm getting any type of advantage from JPM, I'm gonna, that I think is worth sharing, I'm gonna share it. I got that advantage on AMD. They still feel that there's going to be a significant sell-off here, and so that's why I got the puts early.
And technically, again, you have fundamental information. Technically, I wouldn't be taking a trade on it, but if I were looking at what's currently happening with it, you've got a breakout here of this high plus that's now been violated. Okay, so that's a false breakout. And you have a bearish engulfing candle forming. And you can see the weakness when the market's been making a new high. So, yes, looking pretty good right now.
Right now it is, yes. Um, Reacto Facto went long XOM last Friday for this week's options. And can you provide some clarity on why that stock reversed on you? Well, yes. Any oil stocks, I'm long Oxy right now for probably the same reason. Um, any oil stocks is going to be extremely sensitive to the news in the Middle East. And, if Iran's oil or energy facilities are attacked, oil stocks are going to go through the roof. So that is a news-based trade. So when you're asking why did it reverse or not reverse, there are certain times when a sector or an industry, like right now, oil, is going to not really be reliant on technicals. It's going to be reliant on a particular news event. And so depending on how that news event goes is going to be depending on how oil stocks go. Oil prices are going to be very reactive to any type of news coming out of that region. So that is why your trade reversed. You took a trade that is news based.
Very choppy price action. You had a bit of a breakout right in here. And, getting long in here when you got a horizontal breakout and a high minus breakout, this is kind of where I would still feel comfortable getting in the trade. I hate chasing stuff, especially in this market. And when I say this market, let's take a quick look. Okay, this is a big compression here. There's your FOMC reaction Thursday morning. There was the new relative high, and we've poked above it, but this is just a gigantic compression. And we've been waffling around AVWAP-Q. So there's no market momentum outside of today. There really isn't much. So that's why we are in buy the dip mode, because you're going to get lots of dips, even on the strongest of stocks.
And that kind of applies to the next question, which is a newbie here. In a strong market like today, where strong stocks fly along SPY, just wait for the dips to apply. For example, above VWAP alerts will probably not appear for strong stocks. Yeah, I mean, look, the dip gives you a lot of things. Obviously, a dip gives you a better price entry, but it also gives you a chance to test that strength. Take a look at Microsoft right now. Microsoft, one of the stronger stocks today. And it jumps up and it goes up to around almost 420 from the open straight up. But now look, it's now coming down to VWAP. So now that's going to test the strength of Microsoft. If VWAP holds here, right? If Microsoft hits VWAP and it holds, then yeah, okay, you can have a lot more faith in going long that stock. If VWAP breaks, you're going to be very happy you didn't go long that stock when it opened. So most stocks, you're mentally, you'll always remember those stocks that just kept on going, right? Oh, I waited and waited and waited for the dip and I never got it and kept going. Yes, you will miss that occasional stock. Granted, most stocks will do what Microsoft is doing right now. You will get a pullback in the market. There's no, I can't remember a single chart where the market just went up, 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 up all day. You'll get a pullback. A lot of those stocks, even the strongest ones like Microsoft today, will come back down. We'll try to test VWAP. Traders want to know, institutions want to know, is this stock strong enough to withstand that test? If it does, you now have a good entry point and still plenty of upside. If it doesn't, you saved yourself from getting into a long that reversed. So yes, it does apply because, the selective memory of remembering those stocks that did nothing but just go up all day long makes you think I'm going to miss it. But the truth of the matter is, a vast majority of stocks do not do that. They will pause. They will retrace. A lot of them will go back to VWAP and test it. And then they will continue their rise up. And then when that happens, that is when you can enter.
So if you see a stock like Microsoft and you really like that D1 chart and you see this right in here, you're thinking, well, it's going to eventually test VWAP. No, I'm not going to chase up here. If you had chased up here, the market's making a new high. I got to have Microsoft. You're regretting that decision in here. You're thinking,
Mhm.
gosh, I should have waited on that. So you right click, create alert, set an alert for VWAP. Let me know when it is above VWAP. Wait a minute, Pete, it's above VWAP. Well, the servers know that. They know it's got to go below VWAP and then above VWAP. And when it happens, you can evaluate how steady the selling pressure has been and what the stock has done relative to the S&P during that time. And sometimes the stock will just keep going lower and you'll never get the alert. Well, goody. I did not need to be buying that stock because it just kept going down. And you'll be very happy that you set an alert instead of FOMOing into the trade here early in the day.
And keep in mind on Microsoft, you have the 50 SMA at 417.83 and the 200 at 417.23. Those are convergent. There is a very good chance Microsoft may come down to test both of those. That's another spot. If that holds and it bounces off those SMAs, that is a good sign of strength. If it doesn't hold, you're going to have a lot of sell volume coming in if it breaks those SMAs. So you have, you Don't just look at obviously the intraday chart. You got to look at the daily chart. Where does it stand? You're looking at those SMAs as very clear lines. Yes, it broke through both of them, but it's very close. Can it test them? Will it hold? Those are the questions you need to ask. Those are the alerts you need to put.
I am going to highlight what I believe is my pick of the day. And I found it on Pop Bull, but I'm seeing it now on heavy volume, heavy buying as well. So this is not the typical kind of stock that I would highlight as bullish. And that's why I'm highlighting it more than being gaga over it. There's so many of you who want to catch falling knives. Okay. When the stock drops like this, oh my God, I love this stock. It's great here. Oh, look, it's finding support. Oh, there it goes. I got to own it right here. Okay. So this first bounce, you're buying it, and then the bottom falls out. You're like, what the heck? Well, this stock makes a low, has a nice bounce. Okay. Good height, good duration. But after earnings, no, there's still some weakness. And now you can see how the stock has been compressing, compressing, compressing. It is forming a base. And when a company has adverse news, or perhaps the valuations are a little bit stretched, you have to form this base over a long period of time, not 3 days, not 5 days, not 3 weeks. How about 3 months? Okay. Now we're starting to talking about a legitimate base. And what's going to happen during that time, all your moving averages are going to start to sink lower and lower. And now we've also got horizontal support with a higher low. Here's a tell, and you can see it's still relatively weak. It's just now getting a little bit of strength, just now getting out of this compression. Long green candle today and above the 50-day moving average. So it's just starting to become interesting to me because this could be a longer term trend reversal. So I'm going to put up an overlay of SPY. And here's the tell for me. So this is what the SPY did, this gray line right here. And you can see when we had that drop in August, substantial drop. Well, what happened to the stock? Yes, it drifted lower, and then boom, on that low, it established that relative low. Okay, now we get this big rally. Yeah, the stock participates. This to me is the tell. You can see how the stock sank down here to the support level. What did it do during this market drop right here? It held its own very well. And you could look at it and say, well, wait a minute, look at this big market rally. The stock didn't participate in that rally right there. That's bearish. Well, it's holding its own after being in a long term downtrend. That tells me that buyers are starting to come in and it's making higher lows. And now, when you do have a market breakout, the stock is getting through major moving average. So what do you do in this situation? You don't get aggressive. This is not where you go load up on call options, but hover over that candle. The low there is 108. And I checked this before we started the live event. You can sell the November 1st, 108, 103 bullish put spread for $1. At least it was there. Now that the stock has moved up, and I think it's continuing to surge higher. Yeah, oh gosh, now it's really climbing. So that spread is not there now, but it was there. And so the reason that I would sell that spread down at this level is because it's got all the support. And if the market had a pullback like this one, I can feel pretty confident that that stock has buyers and that it is not going to pull back and that it is not going to take out that horizontal support level. And I chose November 1st because that's before the elections. It's before the FOMC, and that's the next big event window that we're going to be getting in about 3 weeks or so. So that's my pick. I like
I love it.
SNOW. I wouldn't chase it here. Okay. So what am I going to do on it? And I'll take a look at where some of the buy signals are on this. So we've got a few different buy signals. I'm just going to right click and say, let me know it's on an M15 buy signal. Let me know when this stock goes on an M15 buy signal. And I'm going to set that alert, and I'm not going to think twice about it because at this stage, it's a little far out of the gate. So I'd have to go to an exit. And then when I get the next buy, I'll be able to evaluate it, and I'll want to see if it's preserved this long green candle. I'd like it to preserve the halfway point, which coincides with the 50-day moving average and with this horizontal breakout. So when I get that buy alert, that is what I'm looking for. I like SNOW with those conditions.
I'm going to jump ahead here. Just to quickly answer William DeFriend. Harry, I'm a big fan. This is hard to write, not come off as hating, but I'm curious about your thoughts. Are you beating SPY this year? If not, why? Well, my friend, yes, I am crushing SPY this year. SPY's up about what, 20% this year? Started the year at 470 something, now 576. It's up around 21%. I put my Q3 totals up on Twitter, and the year-to-date totals up on Twitter, so you can take a look at those. But I'm beating SPY by more than 50% on my trade. So that's always a very good gauge, right? Which is, hey, if I just put my money in the SPY ETF and just let it sit there, will I have made more money than I did trading all year? And if the answer is yes, there's a problem with your trading, right? Because you should have just, it's much easier, buy SPY and sit there and check in on it at the end of the year, and you do fine. So you have to beat the market. There's no point in trading unless you're beating the market. And so, yes, I can happily say that I have beat the market. In fact, I have now consistently, since I started posting my trades up on Twitter, have beat the market for 7 straight quarters. So if I didn't beat the market, you probably shouldn't be listening to what I'm saying. So yes, thank you for the question. Don't take it as hate at all. It's a legitimate question and something anybody you're listening to, you have the right to know. And that, by the way, is the larger problem in the trading world, as Pete well knows, as I well know. There are so many people out there, and some of them, promoting different ideas and methods, and like we all know, 95% of them are wrong. The real test is, can they prove it? And I am not talking some sort of Photoshop image of their bank account or of their trade results. I'm talking about, there's one way to actually prove it. Someone in real time, you're posting your trade, your exact trade, your position size, something that can be confirmed on time and sales. So someone posts it, you can look and go, oh yeah, there it is. I see the trade that person made, and then their exit, right? And then you can look again on time and sales and say, oh yeah, there's their exit. You cannot fake that. You cannot, there's nothing you can do to manipulate those results. The results are the results. So unless someone is willing to do that, you need to question them. Because if they're as good as they say, they should be doing that all day long, right? I mean, hey, if I'm as good as some of these YouTubers claim, why not? You should be posting your exact trades all day long. And unless they're doing that and can prove to you that they're doing well, why should you listen to them, right? And I'm not saying that some people who don't do well don't have. I know plenty of people who can teach trading and are terrible traders. Why? Because they do not have the mindset for it. Doesn't mean they don't have the fundamental knowledge about trading that can't be useful. In fact, a lot of people that write the books on trading aren't traders. Doesn't mean that some of the information there isn't useful. But if you're truly going to follow someone and you're truly going to learn from them, make sure that they're actually a profitable trader. And that's the only way, at least on my standard, that you should accept.
I agree with that. I get that all the time as well. How come you don't post P&Ls? I do better than posting some Photoshop fake P&L that half the people put out there. I go over every single trade that I've highlighted in the previous session or two. You got those picks real time. You could have acted on those picks the very next day. Okay. You had every opportunity to take it. And I go back and I review it, and I don't just stop there. I give you the analysis behind every single pick and what I was thinking and why that trade made sense. I'm not going to get that from a P&L. So no, I don't post my P&Ls. I'm never going to post my P&Ls. I'd rather do what I'm doing, which is to give you live analysis. That's what Harry and I are doing. I'll tell you one thing, go back and watch our videos, go back and watch the picks. We're going to keep doing this as long as we enjoy doing it. So you're here. Please pay attention to what we're teaching you because I'm not going to be doing this forever. Okay. I do it because I want to help people. So does Harry. I don't make shit, quite honestly, on YouTube. I think my revenues are like $200 a month. Doesn't even cover my cost of thumbnails. So, yeah, do people find out about the chat room and my software? Sure, they do. But uh, the underlying reason for doing this is that there's so much crap out there, and I want to legitimately show you how to do this. And you never have to spend a freaking nickel on anything that I offer to get that information. The same with Harry. Guy writes the deepest content I've ever seen on Reddit. If you haven't gone to Real Day Trading on Reddit, you sure as heck should go in there and read the damn wiki. It's the best free information on the internet. And I believe Harry's writing another article right now too on buying
Okay.
bounces off of moving averages.
Yes, I am currently writing an article on playing bounces off the SMA. Thank you, Pete. AVGO is a good long. Broke the high trend line, very heavy volume today. The only I disagree, I mean, it is a good long, but what I disagree on is on that trend line break. So if you draw from the top of July 17th, right, you can connect that to July 19th, further connect it to July 23rd. It hits again on 8/22, hits that trend line again on 9/26. So you're getting 1, 2, 3, 4, 5, 4 to 5 different touches to that trend line. Every time you get a touch to a trend line, it just increases the potency of that trend line. And it comes in today right at the top. So right where it is. So this is where you put your alert, right? The alert should be at 184. It literally is on that trend line right now. If it convincingly breaks that trend line today, which it hasn't done yet, so that's where I disagree. But if it breaks through 184 and looks like it's going to close above 184, I agree. AVGO is an excellent long here, but it needs to break that trend line for me because that trend line has been tested many times and that test has failed each time. So I would wait on that. And, like I said, the trend line would start on 717. So right where that gap down happened right after the split. So you see that sort of red bar there on that gap down on 717.
All right. I think there we go. I'm trying to follow along with you. So I
If
was
you draw
using a
that trend
different
line
bar
back,
that's
you can go
close.
all the way back to where that gap starts being. You can go all the way kind of down. You can go back even farther. The blue one you
Yes,
just drew.
it is a nice looking stock. And I think this is one where you are going to want to set an alert
Yep.
because if it gets through that point, it's going to continue higher. In fact, there are a lot of really nice stocks in here. CRWD is one that I showed you right here when it got above the major moving averages and it had a really nice day. And then I said, well, I wouldn't chase it here because it's getting close to these major moving averages. Now you have no room. It's either got to break out or you have to set an alert for a dip. Well, I got that alert for the dip off of AVWAP-E, and I had mentioned it in one of my videos. And I said, I'm getting some alerts on this. And yeah, this would be a decent entry point because I've got plenty of room now to get back up to those major moving averages and another higher low.
So we have, let's see, let's run through these here. We got a bunch. Um, all right. How much do you like PLTR from a technical perspective? PLTR, I mean, this stock is just nonstop, right? I liked it all the way back down when it was at 25. It certainly has broken through just about every single technical indicator you'd want it to break through. It's got decent volume today. It's strong. It's relatively strong. It's above VWAP. Yeah, I like PLTR a lot. You got to get out of your head, which I'm sure a lot of people looking at the stock right now have in their head. It's just run up so damn much in the past 2 to 3 months. it's going to pull back sometime. So, this would be a bad time to go long. Well, let's ask yourself, would have you thought that when it was at 30? Would have you thought that when it was at 35? I mean, you would have missed each one of those. So don't, it's strong until it's not, right? And if it show you going long, and if it shows like it not keeping up with its relative strength, then you get out of the trade. But you don't want to miss it.
Think we might have just lost Harry. So I am going to continue on and hopefully he'll rejoin us here. But PLTR, yes, super, super strong stock. Another one that tends to have some dips along the way. So this is one that you can try and buy a dip on. I would not be chasing it up here. I'd be setting alerts on it. I had a question. When you get a day like this, so this looks like a bullish trend day with a breakout to a new high, should you throw out the premise of buying dips altogether? Well, first of all, as you're approaching that all-time high in here, we're in the chat room talking, and I said, yeah, we're getting up this resistance level. Let's wait to see what this bearish cycle produces. And as we get towards the very end of the bearish cycle, it hadn't produced anything. We would normally be looking for the market to roll over. Given that it didn't, and that we were hugging a high, this was looking like a bearish divergence, which is very bullish. And now that we poked through, excuse me, we still wouldn't be buying right here because we want to make sure that we have follow through, that this is not a long green candle, a head fake that instantly reverses with a long red candle and then we fall back in. No, we had follow through. This is where you want to be buying. Okay. You get confirmation, you can add to positions. You can add to positions. If you missed this whole thing right here, okay, you just couldn't get in, it's all right. You're being patient. Okay, that's not a bad thing. Now you have to wait for the dip once it starts to get overextended. And now you've got a dip, you've got a long red candle and a almost bullish engulfing candle. And it looks like we're not able to get down to VWAP. Would I be buying in here? I've got a bullish 1OP cycle. If I were long, I expect to have to weather a little storm like this. This would be a decent entry point if you had no positions on for day trading to try a starter long. Okay, not going gonzo. And during this pullback, I want to find a stock that is relatively strong because if I do get a market pullback, that stock is going to still hold its own very well because it's got relative strength. And for exactly that type of occasion, we have a search called relatively strong 30. And I'm trying to bring that up right now. And let's see what held up well. These would be the stocks that I'd want to be taking a look at. Tesla, too choppy, no interest. AVGO did not pull back much, making a new high. Yeah, I would be trying AVGO here. Day trading. Harry was talking about swing trading and needing to get through that next resistance level. So you may not want to swing trade it. MSTR pulls back. Kind of did what the market did. I want something that's doing what the market is not doing. HD pulled back a little bit too far in here. So that's not good, even though it's got relative strength in here. You can see that it's been weak earlier in the day. So I'm looking for the ultimate strength. Pulled back early, grind, grind, grind. FUTU, nah, I'm not too interested in any of those. Okay, ding, ding, ding. I found one I like. So you might have to go through 10 stocks to find one you like. Look at Apple. Let's take a look at the D1, see what Apple's doing. It's kind of chopping back and forth, so I'm not overly impressed with it. Had it gotten through a resistance level, I'd be a little bit more excited with it. But Apple right now at least has relative strength for the time being and some pretty decent volume. I'm going to keep going down the list and seeing if I can find something better. Okay, this is not bad. PANW is not bad. You've got the rally up, you've got a compression, you've got the market kind of holding its own right here. What do I do with that? I'm going to set an alert and I can set that I'll just use an end of day and I'll go with that high right there. Hey, if PAMW can get through that level right there while the market's starting to recover, good. I'm buying into a compression. It's got a nice breakout through this downward sloping high minus trend line. Okay, yeah, I could day trade this and it may challenge this trend line today. So I've still got room to it. So anyway, that's how you would handle a market that is taken off on you. You should never chase. You should never feel like you have to chase. There will always be an opportunity to get long. And if you buy in here and you start weathering this, you get very nervous as this if this is where you're just starting to enter. So ideally, you've been putting starter positions on here, and your average cost is way down here around VWAP, where it would take a pretty considerable shakeout for you to scratch the trade. Otherwise, you're just starting to kind of nibble in here and put some starters on, and you may not get much further into it than that. Got news coming up. Got news coming out tomorrow in the CPI. So you've got a little bit of overnight news that could cause a little pain tomorrow, but I like this breakout. Talk a little bit about what happened here. We had lots of time to digest any profit taking at the all-time high. The breakout held after the Fed. You got a Fed that's easing. We have good economic numbers, good job growth numbers coming out. ISM services was excellent. So you've got a good fundamental backdrop right now. And you have earnings season starting on Friday with JPM. Earnings season, as we head into it, tends to have a bullish bias to it. So I think bank stocks are going to perform pretty well. I'm not looking for them to scream higher, but they'll set a solid footing for the market. So yes, we've got a little breakout, and I think we're going to start drifting higher here. So let me take a look. When should you exit a losing trade? Boy, I've got a whole article on that. You're short mRNA. Uh, boy, if you right now, I would not be short anything personally, but I think mRNA has been coming up on some short lists, mRNA, and it has been a pretty dang weak stock. Boy, excuse me, if you're short that stock, you shorted it yesterday and you got a market making a new high, your losses are tiny, minuscule. Okay, so yes, this stock is very weak. You could buy it in right now and take a tiny little loss on it. But yeah, this is a weak stock. So basically doing what you had expected it to do. It's still below the EMA 8. So any damage that you have on it right now is going to be minimal. And if you were putting this trade on, your mindset probably was, hey, I don't think the market's going to make a new all-time high. I'm expecting that resistance to hold. As that resistance holds, I'm expecting the stock to continue to do what it has been doing, which is to drift lower. Oh, whoa, wait a minute. We got a new market high. I wasn't expecting that. Take a small loss, see what the market rally does, see if you get some kind of short covering in mRNA. And if you do, you may have a better entry point for that short, and you'll have more information as to whether or not the market breakout is going to hold and continue. But by all means, you should not be shorting, in my opinion. And I've been firm on that for the last few weeks since that FOMC statement and the 50 basis point rate cut. There is no reason to be short right now. If you're a pro, you can do whatever the hell you want because you're going to know when to get in and when to get out. So you get out when your game plan is devised and you've got what you're expecting to happen, what you're not expecting to happen, and when the stock starts to, in this case, gained some relative strength. Well, it's not what I expected. I thought it would remain relatively weak. Well, it is relatively weak. Your unknown was the market breakout to the upside. Okay, I didn't expect that. Got to shut the trade down because the market drives all our decision making. We're trading the market. I mean, I can't make it any more simple than that. We are trading the market, but we are riding the fastest horse. Okay, so our stock positions are merely surrogate market positions. That's why we trade relative strength and relative weakness. Okay, that's the whole premise here. So, yes, this is a good short, but the market is working against you. So you're focused on the wrong side here. And I know I'm going to get this. Yeah, but Harry did this trade and Dave W did this trade. They're professionals, okay? Dave's probably got 20 longs and maybe two or three shorts on. Harry probably the same thing. But you got people who are thinking, oh, I really like shorting because this market feels fluffy and I think it's going to roll over and die. And so all they do is short. Not a good game plan. Buy dips, buy dips, buy dips. I've been preaching that for a while. So that's what your mindset should be. And it should still be that because this is not a super great, awesome, incredible breakout. Okay. The volume has been pretty crappy in here. We've been compressing. We've seen two-sided price action. We got a big news event coming up in 3 weeks, two news events. So I'm not looking for a gangbuster melt up here. I'm just looking for kind of a choppy float higher where every rally is tested the next day and you go through a bid check and then that provides you with an entry point and then you recover and then you do the same thing the next day. So it's just this tiny bodied little float higher. It's a good question. I mean, I've written so extensively about how to know when you should be exiting trades. So on real day trading, Reddit, please go in, look up Option Stalker. You'll find the articles that I posted to the wiki. And I have one posted. I think it's The Anatomy of a Trade. It's a 5-part article, very, very detailed. And it tells you all the things that you should be looking for when you enter the trade, while you're in the trade, and the signs that you should be looking for that tell you it's time to exit. That basically is trading to, I mean, the whole book you could write on when should I enter and when should I exit. I mean, that's what trading is. I've lost Harry. Must have been something I said. We're trying to get him back into the live event here. I'm hearing that Harry has lost power. So let's see here. Let me see if I can find another question here. Let's see. How do you trade 1OP on a day like yesterday where there were a lot of divergences? I'm going to take a look at that. Um, the 1OP indicator we do use for timing our cycles. So let me zoom out a little bit. Let's take a look at it. And we'll go into a 5-minute chart, which it's optimized for. And so one thing about divergences is when you have a very strong trend, you can see there are very few red candles in here, very little retracement, pretty tight, not a lot of wicks. You're not seeing a lot of chop back and forth like this. So there's very tight price action, and that tells you that we could see a divergence. So right in here, we're kind of waiting to see what happens during this bearish cycle. We also know that we have major resistance here, so there's no reason for us to rush into trades. As this starts to unfold, now we feel pretty confident because the market is continuing to march higher that this is going to be a divergence telling us also that this is going to be a good bullish cross, which it was. So right now, we're still in this bullish cycle. We got the market kind of pulling back a little bit right here. Let's take a look at yesterday. Yesterday, we didn't have a lot going on early. So you've got a little bit of a bearish cycle running here. Market moves higher. Is that a bullish divergence? I would like to see stack candles like this with a nice uptrend versus kind of up and down choppy in here. But you get a bullish cross in here, and then the market kind of flattens out and doesn't do anything. This is a bearish cycle that doesn't produce. Okay, that is what we call a benign cycle. Market compresses. When you get these benign cycles, it increases the odds that the next cross is going to be good. And so you get your cross right in here, still have a little bit of a pullback during that bullish cycle, but then eventually it does take off. So yeah, yesterday was a little bit challenging to read as far as 10p, but I can go back and show you so many examples where uh, 10p has just absolutely nailed the moves over the course of the last few weeks, and it's easier to trade. I've got a lot of people that are on the live event right now that aren't necessarily option stalker members, so um, or one option members. So I'm going to kind of stay away from 10p for the time being. But if you go in, if you remember, you can go into the website. I have at least 3 or 4 videos on how to trade 10p as well as articles on it, so that you can kind of see where those divergences come into play and how to identify them and how to trade them. But you'll find other really good examples where you've got a bearish cross right in here, and then you see things fall apart. So it tends to be very early. You've got a bullish cross here, so you know that you should start looking for some type of market support, double bottom, higher low. Okay, here we go. Nice long green candle. This is probably going to produce. Let's see here. Talking a little bit about oil. CL sold off yesterday. I think that dovetails into Harry's XOM. What are my retirement plans? I can't speak for Harry. My retirement plan is I'm going to try and finish my book in the course of I'm going to try and finish the stock second section. I've got about 14 articles to write. Finish that by December, and then I'm going to try and finish my options last section and complete the book sometime in April. It's going to be a huge weight lifted off of my shoulders. It's something I've been wanting to do. It's been very difficult to write. And then I'm just going to work on 10p, and then I'll probably start trading more. So I don't plan on really changing much. I do plan on working fewer hours though. And this is what you can only play so much golf and fish so much. I mean, even golf and fishing aside, I'd rather be doing this than golfing or fishing. So I'll be around. I just may not be as active. And when I say active, I may not just be posting and posting and posting all day long. I post market comments. I post pre-market comments. I write articles. I post intraday market comments. So I'll continue to do it, but probably at a scaled back level. And if I do it on a scaled back level, I'll probably be able to do it for a very long time, hopefully in the next 5 or 10 years. Okay, I think we've covered Microsoft. Entering positions, great to learn from in hindsight. So yes, when you're looking back on any trades that have been posted, for instance, in the chat room or any of the videos that I've done in the past, I always let you know what the market context is, because that is the most important thing. We've got to get that D1 market context that sets up what's happening on an intraday basis for the market. And if you're only swing trading, then you're looking at long-term market and long-term stock and trying to identify when you've got a very high level of confidence on a D1 basis for both. And if you've got not great market confidence, but you find a really good stock, that's okay. You take that stock position then, but you trade smaller size. When all the tumblers line up and you got the market in sync with the stock, okay, now I can get more aggressive with it. Now I can trade larger size. And you do have to vary your size. It's like a professional blackjack trader, uh, professional blackjack player who is waiting for the odds to favor them. Small bet, small bet, small bet, small bet. Ah, the odds are starting to favor me. Now they start increasing their bet size. Well, it's the same way with trading, as you're really waiting for those optimal conditions. The key is not pissing your capital away when the conditions are less than optimal. And that, I think, is one of the biggest problems that traders have, is they want to just keep going at it day in and day out using the same type of size. How do you deal with taxes? Paying taxes is a good thing because it means you're making money. So first get yourself to the point where you're making money, get yourself to the point where you're consistently profitable trader. When you feel that this is something that you can do professionally, then you should set up an LLC, and you should be your status should be that of a professional trader. Then you'll have tax advantages. One of the great things that you can do, and I'm not a tax expert, so I don't talk about this much, but you, as an LLC, set up a 401k, and you can take and put your trading profits in there up to 55 grand a year. And then now you trade your 401k, and that's tax free. What I started doing 20 years ago, and that's where the majority of my trading takes place. So I don't even worry about taxes. Someday I'll have to pay them, but hopefully won't be taking money out of there for quite a while. Green Tax Trader, by the way, is a good resource. Robert Green is the guy. All right. Well, I'm not seeing a lot of questions in here, so I'm going to flip through a couple charts. I'll tell you what I like. I'll tell you what I don't like. Let's see what we've got here. SMCI came up, and that has been another stock that's been pummeled. They've got some FBI investigations that are going on. They've got some accounting irregularities. Their business, however, has been growing in leaps and bounds because of AI and AI servers. So um, this is a nice little support level with a higher low. Yesterday, I did suggest selling an out of the money bullish put spread. I do like that type of strategy here, and I believe it was the 38.37 bullish put spread expiring Nov 1 for a 20-cent credit. That trade is doing really nice, but that's how I would approach this right now. I don't know that I would be able to just outright get long this until I see it above the 50-day moving average, which kind of closes this gap here, and it's above, closes above AVWAP-E. So I'd want to see that happen. And once that does happen, then yeah, I've got a little bit of support here, and it's got plenty of room to that 100-day moving average. Could be good. Oracle was actually going to be the stock that I was going to highlight and pick. You've got this really nice compression right in here, and now you've got a compression breakout, and we're getting through this horizontal resistance level. I like it. I wish the volume were a little bit better. Take a look at the M5, and you can see how the stock has continued to power higher. And let's go into the SPY chart. And remember when I talked about the market coming back in here and that it's starting to find a little bit of support? Ultimately, you'd like to try and see what it does around VWAP because there's a good chance that it'll test that level. But let's say that you were nibbling in here. You're just taking your little starter long position in there. Oracle is the kind of stock that you would want to be in. And you can see in the last 30 minutes, what did the stock do? Well, it actually went up, but you could see right in here, compress, 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 compress while the market is pulling back. Man, wouldn't it be nice to find a stock that's above the prior day's high and is compressing with relative strength when the market's pulling back? Did you see how I just looked at a stock that I liked and how I pulled all of that information out? Compression visually, relative strength. I know the D1 is good. It's above the prior day's high. Well, let's see if there's something else that looks good like that. So we'll go in. We're going to have relative strength to the market, M5. We're going to have a stock that's greater than the prior day's high. You have to deconstruct these really good charts that you see, and you've got to be able to think about what variables would be common to that stock because you want to find other stocks that are just like it. And I'll put that up here. And this already is going to be a pretty decent stock. And let's put above VWAP. So we have that also as a criteria. Wow, that's a pretty long list of stocks. So is there anything else that I can put into this list? Well, first of all, this is going to be a pretty dang good list of stocks. New high a day. I could have put that in here as well. Oh, well, these are probably going to be really good stocks. Look, above the prior day high, making a new high of the day, greater than VWAP, relative strength when the market's pulling back. If I click through these, you're going to see, and that's all I'm going to do. Look at that. Pretty choppy there on spot. T, looking good. Do you see how easy that was? I just had to know, what is it that I'm looking for? And I could also go in and I could take a look for stocks that are making a 20-day high. That's a nice search. So post some of your questions because if I don't have any, then I'm going to wrap this session up and continue to look. What are my thoughts on ANET? I'm so glad that, John, you're talking about Option Stalker and you're on the road and you like it. I think for a mobile app, it is fantastic, but I am pretty ingrained into using Option Stalker Pro. So obviously, that's what I love the most. ANET, A-N-E-T. Boy, that looks absolutely beautiful. And let's take a look at, oh, I was going to look at the compression search also. Let's take a look at that daily chart. Yeah, that's a beautiful breakout right in here. This stock is going to continue to go higher. Awesome pick. Really good stuff right there. Let me bring up that previous search because I think the compression is what I was also interested in. So we're going to take off this new high a day and we're going to take a look at a stock that is in an M5 compression. And so we've got compression breakout and we've got compression in. I want it in a compression. So it's not bullish or bearish. That's why that's blue. And so these stocks are in a compression with relative strength on a 5-minute basis with the S&P 500 pulling back. Stock is above VWAP and stock is above the prior day's high. These are my candidates. Let's take a look at what we got. And we'll go into the 5-minute chart. You can see your compression. You can put up the 1.0 squeeze indicator. I'm not going to do that. So yeah, all these stocks are right within striking distance of their high of the day. Amazon, market pulls back, stock flat, holding its gains. If you're nibbling here, this is the kind of pattern you want because if this turns out to be a launching pad for a new high of the day, you're in this and, oh, I was wrong. The market's continuing to pull back. But because buyers are in there, I can scratch the trade at any time because I'm in the right stock And that is the advantage of trading relative strength. Take a look at a few more here. So these stocks you can see, they're all compressing. This is all nice stuff. Actually, I'm going to take one more look at snow because that's one that I was highlighting earlier today. And so we're going to be looking for a little bit of a pullback in snow, but I like this one. Let me see what other questions have come up. Notice that I don't speak much about benchmarking against sectors in the system because it's secondary to relative strength, relative weakness for SPY. Uh, it, no, I don't reference it because for a number of different reasons, and I do have extensive articles written about sector strength. Okay, so I don't talk about it much because if you look at all the different companies, who's to say which company fits into what pigeonhole? Okay, they're very, very diverse companies. Some of them are incredibly different. Okay, so they have different divisions and different business models. Is Amazon a retailer? I don't know. Is Amazon a tech company because they've got AWS? I don't really know. It kind of fits into both. Well, if I'm combining Amazon and comparing it to Walmart or Kohl's department stores, that's retail. That's not a good comparison. But the companies still have overlap. The reason that I don't like using sector strength as much, and I have it available, I mean, right here, if you want to compare to sectors, you can go right in here and compare and look for sector strength. So not only are you looking for uh, strength within the market, you're looking for strength within the sector. So yeah, we do it. So if I'm looking for the strongest stock in the strongest sector, I'm still going to end up seeing it because it's still going to be one of the strongest stocks versus the S&P 500. And so I don't have to care about that categorization. And there are a number of couple of different major ways that you can categorize a company, a couple of firms that have set up all of their IDs as to which sector it fits into, which group it fits into, which industry it fits into. And that stuff changes all the time. So I don't find that to be a very efficient method. Now, if you want to say there's a group of oil producers that are specifically drillers, well, then, yes, absolutely, those stocks are going to be highly correlated. If you're talking about airlines, yes, United Airline and Delta Airline, they're going to be very highly correlated. So there are certain industries and groups where that correlation could be meaningful. But in general, if you're comparing, let's say, tech stocks, my God, they're so diverse. You can't compare one with the other. So that's why I just stick with measuring relative strength versus the overall market. And I don't worry too much about what the overall group is doing. Uh, Kava. And I don't know that Harry had a pick of the day today. He lost power, so I'm not going to be able to get him back. So maybe I'll have to do a pick for him. Kava. Okay, Kava's got a nice little dip in here. Take a look at the D1 chart. And it's trying to break out right here. Yeah, I would want to see that next little dip and see if it has a buy signal. If it's got a buy signal and it does not retrace that entire green candle, that could be a nice little entry point. Preserve that EMA 8 could be a nice little entry point. That's how I would trade that one. EST, I think that's been a runner. It's actually been up quite a bit. Oof. We had this question come up in the chat room. When you start distancing yourself from the EMA 8, You've got to buy dips. You cannot chase this thing. Okay. And if it helps you, I've found that it has helped me in the past. I don't know what VST does. I can go in here and find out what they do. And okay, electricity power generation. Awesome. So why in the hell would a power company go up like that? Did they discover a new battery? I mean, really, I'm being facetious, but ask yourself, why do I need to chase an electric company up here? I don't need to. I should be buying dips. I should be setting alerts. This is a nice breakout, but this stock is likely to pull back. If I look at the previous chart, it's up and it's down. Okay. So, I mean, it's chopping around. This is a nice horizontal breakout. If you're in here, all right, I'm going to ride that thing. I'm going to be looking to take profits probably in here because it's an electric company. Oh, I get a couple of nice big green candles. Big bearish engulfing candle right there. Boom. I am out. Well, you told us to buy dips. So if I'm looking to buy dips, what do? Well, I can wait to get an M30 buy signal. All right. And so right now it's on an M30 sell signal. So I'll right click. I'm not going to do another thing with this thing until I get an M30 buy signal. So if I miss that initial breakout, it's okay. Just set my alert. When I get that alert in here, what do I want to see? Well, these are the questions that you have to answer. What do you want to see in a stock that is super strong where buyers must have it? Well, I would not want to see a big pullback here. I'd not want to see a lot of stacked red candles. As it starts coming down to where this compression was, yes, I would hope to have it find some support here. I was kind of hoping to have support at the EMA 8, but I'm not getting that. So now it looks like there could be a bit more of a prolonged pullback. And so as I get that buy signal, I'd like to see some support starting to form here. Microsoft above VWAP. Remember that alert that I just set? And there's your tested VWAP. And now I can decide if this is a good entry point. Hey, looky there. I got the market starting to lift off here. So yes, I could try Microsoft right here. If I were bullish on it, I didn't chase in here. I set this alert and now I've got a nice bullish engulfing candle. I've got a little bounce off of it and stock's still not strong relative to the market. So I would not be buying it here. But if it had been strong, then I would be looking to enter in here knowing that I've got a natural level close by, which would be those two lows. But realize also that on a D1 basis, Harry mentioned this earlier, this is so damn important to know. Okay, you got to see the trees from the forest. Look at those converging MAs. So 50-day comes in at 417.82. We're at 417.78. That is resistance. AVWAP 417.70. Okay, 200-day moving average. It's really important that you just don't look at the 5-minute chart. Got to look at what the market's doing D1, what the market's doing M5, what the stock is doing D1, what the stock is doing M5. You've got to know all those levels. And only when all the tumblers line up, all of them, you have your window of opportunity. And if you do that, you're going to have a really high win percentage, but you do not compromise. So if the market conditions aren't there, you don't trade. If the stock is not doing what it's supposed to, you don't trade. It's all got to line up. So I think I've lectured you enough. I'm going to try and find another stock, and I think I'm going to make it Oracle. I'm going to pick Oracle for Harry, but let me do something really quick here because I'm going to go into the chat room and I'm going to see if there was a stock pick that he might have had earlier today that I can use. I don't have anything jumping out at me. So Oracle. Oracle is going to be one of your longs of the day. I was going to highlight that one. I like the price action that I'm currently seeing. ANET looked really good too. So Oracle is going to be one of the picks of the day. And then the other one is I like SNOW in particular. I really like selling a bullish put spread below this horizontal support, below the 108 price point, with the notion that this support is going to hold. And so I'd like to see the stock pull back, not lose the 50-day moving average. I want to see that preserved and that little pullback. So we're talking about 116.58, which is about $1.20 or so. That little pullback is probably going to give you the credit that you need down here to sell that November bullish put spread, November 1st expiration, 108, selling that put, buying a 105, doing that for a $1 credit, keeping it inside the FOMC statement and the election. Thanks so much for watching today. Again, please, in the description of today's live event, I do have a couple of links for charities that are helping out the victims of the hurricanes. Praying for all of you, and especially now that we've got Wilbur coming up on Florida, praying for all of you there. I hope that the damage is minimal, although it looks like it's going to be particularly nasty. Be safe, and I will be recording a video on Sunday. We will see you then. Trade well, buy dips, be long.